Good morning, students. Welcome back to the session on advanced accounting. So we are discussing accounting standards and we'll continue today with our discussion on the accounting standards. So today we are starting with very important and very interesting standard, that is about standard on revenue recognition, AS9. Revenue is considered to be the most important item in the financial statements of any entity, whether it's a company or not a company, whether this company is making profits or not. Every entity has this objective of earning more revenue. Whether it results into profit or not, that's a separate consideration altogether. But definitely, this is something which also reflects the performance of the company. This is also something on which the ultimate objective of the company depends. So that's why one of the most important items happens to be the revenue in the financial statements of our company. And as regards this revenue which is required to be recognized, or the way it is required to be recognized, is covered by accounting standard 9. So we are discussing this accounting standard 9 now. Yes, 9. And you can just refer to this page number 1.31 if required. Now, let us understand first of all about the revenue streams. In terms of revenue, which we are going to discuss as a part of the standard, almost each and every type of revenue is covered except for those revenue streams, or except for revenue in case of certain companies which is covered by any other standard. And which standard happens to be that standard? Contractors, in respect of their construction contracts, or we can say hire purchase or lease agreements, or we can say any revenue which is in the nature of government grant, or we can say revenue in relation to insurance companies. So these are some of the revenue streams which are not covered by this standard. And the reason why this is not covered by this standard is because a separate guidance in respect of these types of revenues is available, maybe in the form of a guidance note or maybe in the form of a accounting standard. For example, if we talk about construction contracts, when the contractor is involved, then we have accounting standard 7, which deals with this. So we'll come on to that also. Yeah, clear? Otherwise, if we talk about any type of revenue recognition, that is covered by AS9. That is on, you can say, almost each type of revenue which is covered over there. Now, what type of revenue is possible? As regards the revenue, this standard says that the revenue could either be from sale of goods. So we are saying revenue may result from goods or the services. So let us suppose if we sell some goods, this will result into revenue. If the entity is a service company and this entity is rendering services, that again will be covered by AS9. Means we are not limited to goods, we are not limited to services, we are talking about both the things. But of course, there's a slight difference in terms of the way the revenue recognition is required to be considered when it comes to goods as compared to services. All right. Now, first of all, we will talk about sale of goods. Now, when is this revenue from the sale of goods allowed to be recognized, or you can say required to be recognized as a part of this standard? this standard says when the following conditions are fulfilled, only then the revenue will be recognized by that. Otherwise, the revenue will not be recognized. Now, let us understand what are those conditions. Sale of goods. Now, when is the sale required to be recognized? First, there should be a transfer of goods from the seller to the buyer. And in terms of this transfer, risks and rewards which are attached to the goods have got transferred from the seller to the buyer. So we can say there should be a transfer of risks and rewards. Okay, very, very important point, or you can say the most significant consideration in terms of checking as to when the revenue can be recognized happens to be the transfer of risks and rewards. Yeah. And now let's take some examples to understand this. So there's a company A Limited. Which has purchased some goods from the seller. Now, seller and the buyer. Who is the buyer? A Limited. They have an arrangement that the goods will be picked up by the buyer from the location of the seller. And let's suppose seller happens to be the manufacturing company and it has got a plant. As per the arrangement, goods will be picked up by the buyer from the location of the seller. Means from the factory gate, goods will be picked up. Now, from the time the goods are picked up by the seller, by the buyer from the seller's place, who is carrying the complete risks attached to those goods? It's the buyer. Who will have the ownership? Who will have the rewards which are attached to the goods when the goods will move from the location of the seller? It's again the buyer. That's why in such type of arrangements, even though goods are in transit, you can say goods are in transit, which means that the goods have not reached place of buyer. They are on the way. Even then, if you look at the seller, he has transferred his risks and rewards to whom? To the buyer. So that's why when would the seller record revenue in this type of transaction, in this type of arrangement? At the time when the goods are moved from his place. Correct? Yeah, correct. Let us take another example and just try to differentiate between these. So this was, let's suppose, seller buyer. Let's suppose there is another seller. This is also a manufacturing company. And now we have buyer 2. Now we have buyer 2. Now in this arrangement, seller is required to deliver the goods to the buyer at the location of the buyer. Okay. This is the location of the buyer. Who has the responsibility to deliver? Seller. That's the understanding. And buyer is saying that I will make the payment only when goods will reach my place. Otherwise, I will not make the payment. It may also happen that for convenience purposes or for some administrative convenience, this pickup arrangement, this pickup is arranged by whom? This pickup is arranged by the buyer itself. It is possible. Yeah, it is possible. But even in that case, the responsibility during this period, as regards the goods, as regards the delivery of the goods, is with whom? Is with the seller. Because that's the understanding, that's the arrangement, that's the contractual understanding between these two parties. Okay. In such a scenario, can we say that the risks and the rewards which are attached to the goods have been passed on to the buyer when the goods have moved from the location of the seller? Answer is no. Why? Because the understanding has changed now. So that's why in this second scenario, when it comes to the revenue recognition of the seller, when would the seller be able to recognize revenue? Only and only when they have reached the location of the buyer. We may have a question, okay, and it may be slightly confusing, but sir, goods have moved from the location of the seller, and if the goods will move, seller will be required to generate an invoice, and in fact, along with invoice, various documents will be required to be prepared by the seller. So how do we manage that part? Does it mean that even though invoice will be generated by the seller, sale will not be recorded or sale cannot be recorded? The answer is yes. Invoice generation and revenue recognition are two separate things. Just because we have generated an invoice doesn't mean that we can also recognize revenue. That will be inappropriate. That will be incorrect. Okay. Yeah. Clear on this part? So that's why it's very, very important to understand this condition, that the rules, that the goods in terms of their revenue recognition have to be considered from the perspective of transfer of risks and rewards. Clear? Now, another point which generally arises in respect of this risk and reward happens to be the ownership. Ownership as around the goods may or may not be transferred to the buyer. That's not the important consideration. I'm not saying that's not the consideration, but that's not the important consideration. Even if a ownership is not transferred due to any reason, but if the risks and rewards have been transferred, still the seller can recognize revenue. So transfer of ownership is not important. Transfer of risks and rewards attached to the goods is important for the purposes of revenue recognition. So which means the revenue can be recognized prior to transfer of ownership. Clear? Clear on this point? I think this was also the query of Tanu, that risk will follow ownership. No. In terms of the conditions, the answer is no. But administratively, you will see that risks and ownerships will also go hand in hand. Okay, or the ownership may go first and the risk may follow. But one thing which you have to remember is that if the ownership has been transferred, but as per the arrangement, the risks and rewards have not been transferred, then the revenue cannot be recognized. Okay, yeah, that's why I'm saying generally a company will generate an invoice, and just because the invoice has been generated, company will want to recognize revenue, which is not appropriate. Okay, clear on this? Then Pooja Pradeep has a query. Pooja is asking for example of ownership. Can we consider consignment? Yes, you can consider that. That will be appropriate to consider over here. Any more questions in case you have on this? So this was one condition. Another condition which we need to remember happens to be that there should not be any significant uncertainty. There should not be any significant uncertainty regarding collection. Now, if you observe this, the way this sentence has been drafted is the negative language. Let me just put this language in another form. Instead of saying there should not be any significant uncertainty, there could also be, the way this could also be framed, which was possible, was there should be significant certainty, or there should be certainty regarding collection. Yeah, but can you see the difference between these two? Can you now see the difference between these two? Standard is not saying that you need to have certainty. Standard is saying that insignificant uncertainty as regards the collection should not be there. Which means the seller should be reasonably assured. In a way, there should be a probability at the time when he is making the sale that the money in respect of sale of goods will be received by the seller. Yeah, that the money in respect of sale of goods will be received by the seller. And if there is any uncertainty that the money will not be received, even though he is selling the goods, but the money will not be received, then the revenue again cannot be recognized. So that means we need to look at all of these conditions in respect of revenue recognition. Generally, we will not find this type of problem. Generally. Why? Because otherwise the seller will not be considered to be rational enough to execute this sale transaction. Okay, yeah. But irrespective of that point, we need to take care of this, that the significant uncertainty is not there as regards the collection from the sale of goods. Okay, clear? Yeah. If this would exist, then the revenue can be recognized. Otherwise, not. Clear? Now I think we can pick up one point. Okay, so let's pick up one illustration. This is illustration 1, page 1.36. I think Charu was discussing about some doubts towards, yes, definitely, we'll take your doubts. The board of directors decided on 31st March X2 to increase the sale price of certain items retrospectively from 1st of January 2000 X2. Board of directors decided that the sale price of certain items will be increased. On this date, the decision has been taken, but this increase will be retrospectively. Starting from this date, increase will start. In view of this price revision with effect from 1st of January X2, the company has to receive 15 lakhs from its customers in respect of sales made from this period to this period. So the amount which therefore becomes receivable from the customers because of this revision with retrospective effect happens to be 15 lakhs. Accountant is unable to make up his mind whether to include 15 lakhs in the sales for this period or not. You are required to advise. So now this 15 lakhs should be recorded in the revenue of this financial year or some other financial year. This is a point of confusion for the company. So you are required to advise. So over to you. If you can just let me know what should be the answer. Amar is saying, sir, this point number 2, that means there should not be any uncertainty regarding collection, is a bit difficult. There's no difficulty. Huh? So whenever you sell the goods to somebody, you should be sure of collection. That's it. Riya is saying that in respect of this question, there's no reasonable uncertainty. I think she was trying to say uncertainty for 15 lakhs. Oh, no. So she's saying there's no reasonable certainty. That's why no recognition of revenue is possible. Okay, so Riya is saying revenue should not be recognized in this financial year. So what do we do with this amount? When do we recognize this? Yes, over to you quickly now. Okay, then Pooja is saying yes, the revenue can be recognized in this year itself. What about others? Should the revenue be recognized or not? If yes, in which year? Okay, then Hina is saying revenue should be recognized in this year itself. Oh, sorry, in the next year. So Hina is saying in the next year revenue should be recognized. Charu is saying revenue should be recognized as we are not so revenue should not be recognized because we are not sure about the collection. Harsh is saying revenue in previous years if certainty exists. Now, previous year means we are going back to the previous years, or you are talking about this financial year. So let us understand now. See, in this arrangement, the risk and reward is already done. As regards the transfer of risk and reward, it's already done. Correct? So I think that is not the point of consideration because the goods have already reached the place of the buyer. Buyer would have also paid in some of the cases. In some of the cases, payment may be pending, but there is no clarity as around that. But we understand this deal is already done. This contract is already executed. Now, all of a sudden, in respect of those executed contracts, company has revised the rates, and whenever the company would revise the rate revision would also be from the date the company is taking this decision. A retrospective decision is generally not taken. Yeah, but in this case, this decision has been taken to revise this retrospectively. So that's why what will the company be required to do? Company will also be required to go back to the customers and ask for this money. It is also possible that in the contracts with the customer, a clause would have existed that the company may revise this price, and this revision is expected to take place from 1st of January. Yeah. Now, whether this clause exists in the contract or not, whether the money would therefore be recovered by the company from the customers or not, this is one aspect which is required to be assessed by the company. And if the company believe that there is no significant uncertainty as regards the collection, then this revenue should be recognized in this financial year itself. Why? Because it pertains to this financial year. Yeah. However, if for some reason this uncertainty exists, okay, then such part, or you can say, then in respect of that amount, revenue will not be recognized till the time that uncertainty is gone. Okay, so while answering this question, you will have to bring in both these aspects. That the right time for recording this revenue is, of course, this financial year, subject to the condition that there should not be any uncertainty. However, if this uncertainty exists, because of which revenue is not recorded, so that's why this revenue will get recorded in such a scenario in the next financial year, or in the financial year when this uncertainty will be removed. Clear? Clear on this? Okay, in the meantime, Vivek has also answered this with a similar sort of understanding. Maman has also answered. Nitya was saying it should be recognized in the same year. Darshan was saying company can recognize it if the company is certain regarding the collection. All right. I can also see this query. Oh, I think there are a lot of other responses also which I missed. Priksha, then Chinama, they all answered this. Dorji. But one query is there from Doravan. How can the price be raised after 3 months of sale? Haven't they fixed the amount at the time of sale? I don't understand the question. As regards this revision, your point is valid. That generally you will not see this revision taking place after 3 months. And even if the revision takes place, as we discussed, this revision will always be prospective. Revision will not be retrospective. But in respect of certain industries, in respect of certain companies, this is a very common practice. For example, electricity companies, wherein the invoices which they raise and the revenue therefore which they recognize on the basis of the invoices raised is always subject to the rate revision. Electricity companies, for example, are subject to rate regulation, and therefore they cannot increase the price till the time it is approved by the regulatory authority. And therefore, if they want to increase the price and the rate is not approved, so what would the company do? Company would keep billing the customer. And whenever this rate approval will happen, company would also demand this additional amount from the customer in respect of the previous months. Yeah, very common thing. So if you look at the electricity bills of yours only, maybe for the last few months, you will understand this point. Huh? So in certain types of industries, this is a common practice. But yes, of course, one point is very clear, that if this clause would not have existed in the contract with the customer when this transaction was executed, then it will be very, very difficult to recover this amount from the customer, because this understanding should have existed when the contract is executed. Okay. Ria is asking only on the assumption we are recognizing. Yes. So in the solution, you will have to bring out your assumption that we are required to recognize. So this is not an assumption. We are required to recognize in this financial, which is the correct financial year for revenue recognition, X1, X2, but subject to fulfillment of condition. Okay. Okay, so now moving further, as regards the services. We discussed that revenue could be in relation to sale of goods or could be in relation to rendering of services. In relation to rendering of services. Now, when it comes to rendering of services, there again, both the conditions that we have discussed in relation to sale of goods will also be required to be considered. So here again, we need to be clear as around the fulfillment of those two conditions. With the only change that service is not necessarily like a good. For example, if we talk about goods, so in respect of goods, what will happen? Goods are delivered and this is done. Say on 31st of December, goods are delivered and the task is complete. Yes or no? But services are not all, yeah? Services you will see are generally delivered over the period, over the time. Yeah? Correct? Yes or no? And as regards these services which are delivered over the period, we need to now be clear in terms of this fact that whether this rendering of services is completed or not. And at times it is also possible, that in this time frame, when the services are required to be delivered, 2 financial years may be involved. So we can say this is financial year 1, this is financial year 2. Yeah. In respect of these 2 financial years, it may happen that the rendering of services has started on 1st of Feb. And this will get completed on 31st of January of the next financial year. Why? This is because when it has started and when it has got completed or when it is required to get completed, in between 1 financial year would end. Can you see this? Yeah? In between the end of 1 financial year would come. Correct? Yeah? So this is something which you will generally not see in case of sale of goods. That's why standard also considers 2 methods of revenue recognition. And these methods particularly in respect of rendering of services. Now, what are these 2 methods? First method is proportionate completion. And the second method is completed service. Okay, these 2 are the methods. Correct? So let us now try to understand how will these 2 methods impact the recognition of revenue in respect of services. Say there's an AMC contract. There's a contract for AMC for 1 year. Now, as per this contract, the services are required to be rendered for 1 year. And on each passing day, services are getting delivered. Correct? Correct? So that's why if the contract involves, let's suppose an amount of 1,20,000. Let's suppose an amount of 1,20,000 is there for this AMC contract. Now for this period, which falls within the first financial year, wherein 2 months are involved. For these 2 months, the revenue should be recorded in the first financial year itself. And that would be done proportionately on the basis of time. And how do you do proportionately? This is for 12 months. So we'll book the amount in the first year for 2 months. So what will be the amount for 2 months? 20,000. This is for 12 months. So for 2 months, amount will be 20,000. Okay. Yeah. So for 2 months, amount will only be 20,000. Correct? But let's suppose if there is another type of contract for rendering of services, say there is some other type. Wherein the understanding between the buyer and the seller, is such that the service has to be completed. Okay, the service has to be completed means the contract has to be fully completed. Contract has to be fully completed. Only then the revenue can be recognized. Then in such a case, what would you do? You will not recognize revenue on proportionate completion. Yeah, you will not recognize revenue on proportionate completion. In such a scenario, because the understanding is such that the contract has to get completed first of all, only then the customer will make the payment, or you can say only then the customer will become only then this obligation to pay to make the payment on the part of the customer will arise. Therefore, in such a scenario, when would the revenue recognition by the service provider take place? When the contract is completed. And that is something which we do in case of completed service contract method. Completed service contract method. Yeah. Again, when it comes to usage of these two types of methods, as far as your questions are concerned, it should be specified in the question itself. But for you, what is important? For you, the important consideration again goes back to those conditions. There has to be a transfer of risk and reward, means the services have to be delivered. The rendering of services should have been done. Whether it's proportionate or completed is something which will depend on the method. Secondly, there should not be any uncertainty as regards the collection. So that condition holds true over here also. Clear? Clear on this? Okay, so now moving further. So far our discussion was all focused to sale of goods or the rendering of services. As regards the rendering of services, it could have covered either type of service. I can see some of your queries now. Darshan is asking about an example. Yes, we'll discuss some more examples, don't worry. Vivek is asking, sir, in hire purchase concept, what would be the treatment of revenue recognition? In that case, seller will recognize revenue only after the last payment. See, as we discussed, this hire purchase is something which is covered by another accounting standard, which is on leases. Okay, so that's why for this particular type of arrangement, this standard will not be the relevant standard. When we'll move on to that standard, we'll discuss it over there. Then I think Darshan is asking for example wherein we collect money for the sales of the previous period. I talked about it. I think electricity company will be the best one for this. Then Ria has some query. Ria is saying, what is it saying on page 1.35? Let me just go to this 1.35. She has picked up some asterisk. So just ignore it. I think all of these points that we have been discussing, let's stick to that. I think you are looking at this complete study material and you're going line by line. So it's very, very difficult. Maybe you can just read it separately later on and then only just try to correlate it. Okay, let us focus on the discussion that we are doing right now. Now the next aspect will be around certain types of situations or certain specific types of items wherein again the consideration is around the revenue recognition. First is about the interest. Now, whenever we talk about interest, generally we think of interest as an expense, correct? And how do we record interest expense? This is on accrual basis and on the basis of time. Yeah. Now, this interest expense would also be an income for the other party. Now, this other party could be a bank, this other party could be a financial institution, or this other party could be any other company or the entity. Now, as around this interest, when should the interest income be recognized? This should be on time proportion basis. So what should be the basis of revenue or recognition of interest income? This should be on the basis of time. Clear? Simple and easy to understand. Number 2, royalties. Now, as around royalties, how should this revenue be recognized? This would again be done on accrual basis. Means whenever the revenue will be accrued, whenever the royalty will get accrued, revenue in respect of such royalty will be recognized. Now, when does this get accrued? That will depend on the arrangement. So you'll have to understand the contract, you'll have to understand the arrangement as around its accrual. But yes, by accrual we mean to say we will not wait for its collection to record it. Means this will not be recorded on cash basis. This will be on accrual basis, the way it is required to be followed for accounting also. Third is about the dividends. And dividend means the dividend income. Okay. When should this dividend income be recognized? When the right to receive dividend is established. When the right to receive the dividend income is established, means once this is approved by the company, what will happen? Right to receive will be established on the part of the investor, and that is when the investor can recognize revenue in respect of dividend. Okay, yeah. So this standard, you can say, deals with three categories broad. One is about goods, second is about services, and third is about these specific situations for the revenue recognition. And I think for this recognition of revenue, there's also a flow chart which is available on page number 1.35. Once we are done with this complete standard, once we also go through some of the examples, you can just follow it later on for the purposes of your revision. Yeah. So now let's move on to some examples. So we can now pick up illustration number 4, which is page 1.37. And I can see there are few queries. Vrinda is asking, but sir, when the services are rendered, then revenue should be recognized, although not received. I didn't understand your point. When the services are rendered but not received, revenue should be recognized. So if the service is rendered, then definitely the receiver would have received the service, isn't it? So that's why revenue should be recognized. Charu is asking, there may be a case where the goods are delivered in lots. Then the amount of revenue which should be recognized is the consideration related to the lot which is received. Yes. So we'll recognize it lot by lot. So you will not wait for all the lots to get delivered and then recognize revenue. You will recognize the revenue lot by lot. And once again, if you will consider that within the financial year, if the lot is not delivered, then only the problem will arise, because we are looking at the revenue recognition of a particular financial year only. Correct? Pooja Pradeep is then asking about this dividend. This is on declaration by the company. Yes, of course. Only when the company will declare, approve, the right to receive payment will be established by the investor. Correct? So Vrinda is saying, sir, I meant payment not received. See, as regards the payment, once again you will have to be clear that if the services are rendered, and when the services were rendered, so the service provider was not having any uncertainty as regards its collection. So what would the service provider do? Service provider will recognize revenue. Once the revenue is recognized, this debtor gets generated. Correct? Now at times, as we all understand, it is possible that the company may not be able to recover this amount from the debtor. Yeah, for which we create a provision, for which we also write off some of the debtors, which is again a very, very common practice for almost every business. But it doesn't mean that if the money is not received later on, so that the revenue should not be recognized. At the time when the services are rendered, goods are delivered, at that point of time, if we are sure of collection, let's recognize it. If subsequently money is not received, then of course you will handle it by creating a provision or writing off the receivable. Clear on this, Vrinda? Then Madhuri asking, does service recognition, means recognition of revenue in respect of service, depends on receiving the receipt? No. See, all of these points, receiving the receipt, issuing the invoice, getting the cash, or receiving the money in the bank, these are all administrative points. Definitely, if you are rendering services or selling goods, you will be required to generate invoice. And definitely, the money may be received partly, fully, or it may be received after a significant point of time. All of these factors will not affect the revenue recognition. Let me just take one example. Okay, and I think this should hopefully clear some of your doubts. So there's a contract between buyer and seller, wherein the seller is required to deliver some goods to the buyer. So seller will sell goods. Okay. And the arrangement between these two is of 100% advance. Means the buyer will have to give 100% payment in advance for the delivery of goods. 100% advance. Yeah. And after receiving this advance, seller will take 30 days to deliver the goods. After receiving the advance, seller will take 30 days to deliver the goods. I think very, very commonly seen by most of us. Now, in this scenario, let us suppose this is 31st March 2022. Let's say this is 21. And on 25th of March 2021, this advance is received by the seller. Now, seller has received the advance on 25th of March. Okay. So seller has received the advance on 25th of March. Fine. and the seller will be required to deliver the goods within 1 month. So say on 20th of April, seller is planning to deliver the goods. Now 31st March has come in between. Yeah. Now you tell me, should the revenue be recognized? Over to you. In this case, as now this advance, the money which has already been received by the seller, should the seller recognize revenue? What is your answer? All of you, I am waiting for a response. In this scenario, will you recognize revenue for the seller on 25th March? Because he has received the entire amount from his customer. Tell me. Harsh is saying no. Siddharth is saying this is pre-received revenue. What do you mean by pre-received revenue? Kanish is saying this will be recognized in the next financial year when the goods are delivered. Why? Because that is when the transfer of risk and reward has taken place. Yeah. Just because you have received advance, can we recognize revenue? No. So that's why please understand, receiving or not receiving the money is not the basis of recognition of revenue. That is only an administrative part. The basis of revenue recognition has to be transfer of risk and reward and the consideration that at the time when this risk and reward is getting transferred, will there be any uncertainty as regards its collection? If let's suppose in this scenario on 20th April, when the risk and reward of goods will take place, what will you say about the second condition that is already fulfilled? Why? Because there is no uncertainty. There is no uncertainty. Okay. And let me just bring in one more aspect over here. And I need your attention, please, all of you. I can see a lot of your responses coming up, which I missed, but let me just bring in some more facts. Because this will automatically clear most of your doubts. Let's suppose I bring in another date. (25th of April). Now let's re-understand the arrangement between these two parties. Seller has asked for 100% advance from the buyer. After taking 100% advance, seller will sell goods to the buyer. Seller will sell goods to the buyer. And the seller also understands, means this is the understanding between the buyer and the seller, that the delivery time for the goods from the date the goods are dispatched will be 5 days. Okay. The delivery time will be 5 days, means it will take 5 days in transit. Seller will dispatch on 20th April, but the goods will reach the place of buyer on 25th of April. Clear? Clear on this? And the understanding between the buyer and seller is very clear. What is the understanding? That the seller has to deliver goods to the place of the buyer. Seller has to deliver goods to the place of the buyer. That is the understanding. Okay. Yeah. Clear on the facts? Quickly, please confirm. Are you clear on the facts? Are you clear on the facts? So buyer is required to pay 100% advance in respect of goods, which the seller will dispatch on 20th April. And the buyer and seller know that it will take 5 days to reach the goods to the location of the buyer. And the responsibility, as per the agreement, of delivery of goods is with the seller. Okay, clear? So seller has to ensure that the goods reach the place of the buyer. Correct? Clear on this, all of you? Facts are clear? Quickly, please confirm. Okay, great. So the facts are clear. Now, tell me in this scenario, can the seller recognize revenue on 20th April? And before you start answering this, let us also consider those two conditions. On this very day, is the risk and reward getting transferred? And on this very day, is the seller having any uncertainty as regards the correction? Now, having regard to those two conditions, please answer. Will it be appropriate to recognize revenue on 20th of April 2021? Yes, over to you. Yes or no? Tell me. Harsh is saying revenue will be recognized on 25th of April. Means when the delivery gets completed. What about others? Saurav is saying no, sir. Revenue will be recognized on 25th of April. But tell me one thing. Seller has already received full money from the buyer. Seller has already received full money from the buyer. Let's suppose if the seller dispatches the goods on 20th April and the goods get damaged, in transit, who will carry this responsibility for the risk in respect of these goods? It will be seller. So that's why if the goods are lost in between, if the goods for any reason don't reach the place of the buyer, what will the seller be required to do? Refund this money to the buyer. Yes? Yes or no? Yeah? So that's why please understand that receipt of money is only an administrative part. If you keep considering that yes, this receipt is there, yes, the money has already been received, can that become your basis for consideration of revenue recognition? Not at all. Now I'm hoping that all of you are clear on this. Yeah, I'm hoping that all of you are clear on this. Yeah. Correct. Clear on this. So I can see a lot of responses from your side. Charu, Tanu, Shraddha, Pooja, Pradeep, they have all answered. Kanishk, Chinama, Hina, Vrinda, Harsh, Sharan, Sandeep, Nitya. So I'm now hoping there is no query as around the revenue recognition. I'm hoping your doubts are clear and we can now move on to this illustration 4. Okay, Nitya has also answered this. So let's go to illustration number 4, please. Riya is asking if one of the conditions fulfilled, can we recognize revenue? No. Okay. So moving on to illustration number 4 now. In the year X1, X2, so in the year X1, X2, XYZ supplied goods on consignment basis to ABC, a retail outlet worth rupees 10 lakhs. So who is the seller? XYZ. So XYZ is the seller and ABC is the buyer. So goods have been supplied, sold on consignment basis. Now, what do you mean by consignment basis? So let's understand the terms. ABC will only pay to the seller for the goods which are sold by ABC to the third party. Means ABC will eventually sell this goods to the end customer. Because it's a retail shop, so that's why customers will come, they will buy the goods from ABC, and only when ABC will be able to sell these goods to the end customer, ABC will make the payment to the seller, means XYZ. Otherwise, ABC will not pay to the seller. The rest of the goods means if there is any stock which is lying with ABC, which ABC believes it will not be able to sell, can also be returned back to XYZ. Okay, means ABC will have a liability. It will have an obligation to pay to XYZ only if it is able to sell to the end customer. Otherwise, goods will go back to XYZ. During the year X1, X2, goods worth of 10 lakhs were transferred from XYZ to ABC. So XY sold these goods to ABC worth of 10 lakhs. And during this year X1, X2, ABC has sold goods worth rupees 5.5 lakh only, and rest of the goods are still lying in the store of ABC, which may get sold in the next year. So out of this, 5.5 lakhs is sold to end customer, and remaining amount 4.5 lakhs is the unsold stock. 4.5 lakhs is the unsold stock with ABC. Now in this case you need to advise XYZ. So we are not talking about ABC in this case. We are talking about XYZ. How much revenue can be recognized by XYZ during this financial year? Okay, so during this financial year, what will be the sale of XYZ? Over to you. Pooja Pradeep is saying 5.5 lakh will be recognized. Then I think same is the response from Riya. Then Amar is also saying revenue shall be recognized by XYZ only when ABC will sell. Okay, but what's the amount? Khushi is saying XYZ can recognize 5.5 lakh. Kanish is also saying 5.5 lakh. Then Pooja is saying 5.5 lakh. I think all of you have the same answer. Shivam, Chinamma, Darshan, I can see all of you are talking about the same thing, 5.5 lakh. Preksha, Sandeep, Siddharth, Harsh, Charu, Saurabh, Vrinda, Tanu, very good. It's great to see that you have now hopefully understood the concept. Now, in respect of this 10 lakh, which has been transferred by XYZ to ABC, can we say it's a sale? No. This 10 lakh is what? This is only a transfer of goods. It's not a sale of goods. Out of this 10 lakhs, what will be recorded as revenue in the books of XYZ? 5.5 lakh. 4.5 lakh is not the sale. And you may have a question, sir, how will XYZ treat this 4.5 lakh? XYZ will say in its books that this is my stock which is lying with a third party. So it's a stock of XYZ which is lying with ABC. So XYZ will continue to record 4.5 lakhs in its books as its stock. Clear? Clear on this? Then I think Jay, Dorji, Meman, Priyanshi, they had the same answers. Very good. Okay, so then I think you should note down your homework 1. I think 1 we covered, illustration number 2 and 3. You should cover as part of your homework. Illustration 2 and 3. Okay. This is your homework. Riya is asking to take illustration 3. Riya, please try to attend this once and let the other students also attend this once. If there still be any doubt, we'll discuss that, but in the next session. Okay. So this is your homework. So with this, we come to an end to this accounting standard. This was a small standard, and again, I am hoping this was simple for all of you. Yeah. Please confirm if you have any doubts, and then we'll move on to the next topic. Yes, quickly, any doubts, any questions in case you have on this? Chinamma is asking, sir, if anything happens to the goods which are lying with the third parties, who will be responsible? Of course, the third party will not be responsible. It will be the first party. And that is how this arrangement is generally structured in terms of sale on consignment basis or these consignment sales. So this risks this risk in respect of the goods which is lying with the third party is generally insured, but this happens to be the responsibility of the first party in most of the cases. Amar is saying, sir, please give half time. Half means, what do you mean by half? I didn't understand this. Yes, any questions, any doubts? No, so can we move on to the next standard now? AS7. Okay, Amar is asking for a break of 10 minutes. Yeah, sure. So I think before we start the standard, we can take a break now. No problem. So we can take a break now, and after the break, we'll start the standard. Huh? So after the break, I think in continuity, we'll be able to do this. Sure. But if you have any questions, any doubts in between, you can just keep sending your queries, and after the break, we'll take it. And don't worry, yeah, it's 10 minutes only. Okay. Yeah. So 10 minutes is the break. So we'll meet after 10 minutes. Hi, welcome back. So we can now continue with our discussion. Okay, so now we are starting with another accounting standard, AS7. AS7 once again deals with the revenue recognition. So you can say we are now only continuing with the same concept of recognition of revenue, with the only change that AS7 will deal only with the construction contracts. Construction contracts in respect of contractors. If you remember, we talked about certain exclusions when we started discussing AS9, and construction contracts of the contractors happened to be one of them. And that was because of the fact that there's a separate accounting standard which is dealing with the accounting of these type of contracts or these types of contractors. Yeah. So now we are specifically covering these aspects of the contractors in relation to their construction contracts. But we will only be talking about the revenue recognition over here. Okay. So we have two standards in a way for revenue recognition. One which we discussed cover largely most of the things, and the second one which we are now discussing, which is covering only the contractors in respect of their construction contracts. Yeah. So now, first, let's understand what do you mean by a construction contract, because only then we will be able to understand which standard is required to be followed. Otherwise, a confusion may arise that in relation to a particular contract, do we go to AS9 or we come to AS7? That's why it's important to understand what will be a construction contract which falls under AS7 and for which you will not go to AS9. So if you can just start referring to this page number 1.19. Okay, so if you can go to page number 1.19. So construction contract is a contract specifically negotiated for the construction of an asset or construction of combination of assets that are closely interrelated or interdependent in terms of their design, technology, and function, or to their ultimate purpose or use. Yeah. In simple terms, you can say these are those construction contracts which take substantial period of time to get completed. Now, what is this substantial period of time? This has not been defined by the standard. Generally, this substantial period is considered as 1 year. But as I told you, this 1 year is not defined. This substantial period has to be assessed, but generally it is 1 year, though it can also be less than 1 year. So now, what can be a construction contract? Construction of a road, construction of dam, construction of bridge. These are all examples of what? These are all examples of construction contracts which will fall under AS7 and for which we need to refer AS7 in respect of the revenue recognition of the contractors who have entered into these construction contracts. Clear? Clear on this? Now, as around these construction contracts, whenever these are executed, two types of arrangements are possible. One, wherein the contractor will charge a fixed amount from the customer in relation to, let's suppose, construction of the road. Contractor has fixed that the contractor will charge, say, rupees 3 crores for the construction of road. Now in this case, this price is fixed. So the contractor will receive only 3 crore. Now whether this 3 crore is received in full at one go or whether this is received in parts is a separate consideration. But this price will always remain fixed. Means no changes there in this price. Another type of arrangement which is possible happens to be the one wherein price is not fixed. For example, say there is another contractor who will construct the road, but he will charge for this construction of a road on the basis of the cost that he will incur. And whatever cost he will incur, he will take a markup of 5%. So let's suppose it's cost plus 5% markup. Markup, you all understand? Markup means a profit. Yeah, some margin. So over here, in this first arrangement, the price was fixed. This was fixed price. But now, as you can see, the price is not fixed. What is fixed? That's the markup. So whatever cost will be incurred, those cost details will be submitted by the contractor to the customer, will be verified by the customer or whatever is their understanding. But whatever cost will be incurred, on that cost 5% markup will be charged by the contractor. So now in this case, some sort of variability has come in because this amount doesn't remain fixed. Yeah. So we can have either cost plus contracts or we can have fixed price contracts in respect of construction contracts which are covered under AS7. Yeah, both the types of contracts are possible and both the types of contracts are covered under AS7. Clear on this? Yeah. Tanu is asking for illustration 3. I just saw your point. No, I think that is the homework. Huh? So if you are not able to solve it now, like I think Ria also mentioned, we will take it up in the next session. Don't worry. Abhijit is saying, sir, does the construction of housing or the building projects get included under AS7? Yes, that's correct. Pooja Pradeep is saying cost. Okay, I think she was just answering this. Very good. Now, we have understood the contracts which are covered under AS7, and we have also understood that these contracts could be of two types, fixed price or the cost plus. So these two types of arrangements are possible. Now we will move on to understand the method of revenue recognition. Okay. How is this revenue going to be recognized for the contractor in respect of construction contracts? So this standard says percentage completion method. is required to be followed for the purposes of recognition of revenue. Now, what do you mean by percentage completion method? How does it work? What is the mechanism for computing these percentages? Let's try to understand all of these points now. One thing is very clear, that this contract is not a small contract. Now we are talking about large contracts, or we can say long-term contracts. Means which will take substantial bit of time to get completed. Yes or no? So that's why let's try to understand some of the things which will get associated with this. Say a contract will take 2 years to get completed. So this is year 1, this is year 2. Say this will take 2 years to get completed. Yeah. Now during this period, it is not possible for the contractor to survive without receiving some money from the customer. So that's why in the construction contracts, you will generally see that the payment will be received by the contractor at regular intervals. In fact, generally the contractor will start with some amount as advance. Generally, contractor will start with that. Okay. So that's why some of the things which get attached to these type of arrangements happen to be the regular cash flows. Or you can say receipts by contractor. Means customer will keep paying at regular intervals. And because it's a long-term contract, so that's why contractor will also set some milestones. Milestone means after a certain period of time, contractor will say this part is completed. Then after a certain period of time, this second part is completed. Then after certain point of time, third part is completed. So this work will be completed in various parts, and for all of these parts, certain milestones will be set. Means first milestone will be, let's suppose, completed after 3 months. Second milestone will be completed, let's suppose, after 8 months. Third milestone, let's suppose, will be completed after 15 months. And fourth milestone, which is the final milestone, will, let's suppose, be completed after 24 months. So that is how this entire project is divided. So we'll have various milestones. Yeah, these milestones will be there to achieve on the part of the contractor. And generally, these payments, yeah, or you can say these receipts, are also linked to the milestone. So the contractor will say, once the milestone number 1 is completed, I'll bill you for 20%. After milestone 2 is completed, I will bill you for another 30%. So that is how contractor keeps billing the customers. Okay, so there are two things now. One, that the money keeps flowing from the customer to the contractor, and the contractor also keeps billing to the customer, keeps raising an invoice to the customer. Yeah, correct. Now, before I move further on this, I need one clarity from all of you. On the basis of discussion that we have had so far, can we say that this billing by the customer, billing by the contractor or collection by the contractor after say some intervals during the construction period will have some impact on the revenue recognition? Tell me quickly. Can we say that this will have some impact or any impact on the revenue recognition? Tell me quickly. Over to you quickly, please. What do you think? What are your thoughts? Will it have any impact on the revenue recognition? These two considerations, do you think will have any impact on the revenue recognition? Means the way the revenue should be recognized, or should the revenue be recognized, should not be recognized on any of these considerations? Do you think these 2 points will be relevant? Yes. Srishti is saying yes, sir. These will be relevant. Okay, what about others? Quickly, waiting for a response. Quickly. Fiza is saying yes. Siddharth is saying yes. This will affect the revenue recognition. What about others? Quickly. Darshan is saying yes. It will have an impact. Yeah, that is why I can understand from your response, Darshan. What about others? Jay is saying yes, this will have an impact. Should be recognized. Should be recognized means we are not talking about revenue recognition, whether the revenue should be recognized or not. I am saying whether these two factors will have any impact on the revenue recognition. That was my query. Okay, Amal is saying part recognition will affect. Okay. Hina, Pooja, Harsh, they are saying yes, they will have some impact. Okay. Let me just take you back to the discussion in respect of revenue recognition that we have had so far. For revenue recognition, we discussed that couple of things are required to be assessed by the service provider or the seller. One, there should be a transfer of risk and reward. Two, there should not be any uncertainty of collection. Correct? If you remember, I also gave you one example wherein 100% advance was received. But even though 100% advance was received, there was no impact of that advance on the revenue recognition. There was no impact. Yes or no? We also discussed that administratively every customer will be required to raise an invoice for the delivery of goods, for the rendering of services. And when the invoice is raised, the risk and reward may not be transferred. So that's why this revenue recognition will not get impacted by the raising of invoice. You remember all of these points that we discussed. Now, let's apply same points over here, because we are discussing revenue recognition only. We are not discussing any other thing. Now, having those considerations in our mind on which we have spent so much time today, your answers were quite surprising. Yeah, except for a few which have just come to me. When I say that the customer will keep paying the contractor, means contractor will keep receiving money, or maybe let's suppose contractor has received 100% advance and the contractor will keep raising invoices. Should this have any impact on the revenue recognition? The answer is no. These two will not have any impact on the revenue recognition. Why? Because revenue recognition is not driven by raising of invoice or collection of money. These two are the features of the transactions. And in case of a construction contract, because it is long term, so that's why you will see a lot of these transactions taking place in respect of this contract itself. But please don't get confused with these things. They will not have any impact in terms of our assessment of recognition of revenue. I'm hoping you're clear on this now. Yeah? Okay. Now moving further on to this. So we were discussing about the construction contract, and I told you that in case of construction contracts, you will find some of these things. Now, let us understand what's the arrangement and how should this revenue be recognized. See, the contractor has fixed a price of rupees 20 crores. Contractor has fixed the price for rupees 20 crores. Means for this entire contract, contractor will charge 20 crores. Yeah. Now one thing is very clear, that this 20 crore is in respect of entire project. This is not specific to any financial year. Yeah. This year 1 is also the financial year. This year 2 is also the financial year. Okay. Now, the question which will arise will be around the recognition of this revenue and whether this revenue should be recognized in first year or second year, and how. Means what will be the amount. Standard says we need to go by the percentage of work completed, and whatever percentage of work will get completed within a particular financial year, whatever percentage of work will be completed within a financial year, that much revenue we can recognize in that financial year. For example, say if we talk about first financial year, yeah, in first financial year, if 30% work gets completed, okay, just give me 1 minute. Sorry. So, in the first financial year, if the 30% works get completed, therefore, in the first financial year, we will book 30% of the revenue, that means 650. If let's suppose in the second financial year, another 20% gets completed, yeah, though it was for 2 years, so ideally remaining 70% should get completed, but let's suppose only 20% work gets completed. So what will happen? Only 20% revenue will be recognized, and remaining will be recognized in the year when the remaining work gets completed. This is called as percentage of work completion method. Means percentage completion method, wherein we check percentage of work completed. All right, clear on this? Yeah, easy to understand. We will just have to check that in our financial year, when this recognition of revenue has to be considered, what is the percentage of work completed? So whatever percentage will be completed, we'll apply that percentage on the total revenue, means the total contract price, and accordingly book the revenue. However, for this percentage of work completed, the question which arises happens to be around this percentage. Next question which arises is around this percentage. Now you may have a question. Sir, will this percentage be given to us or we will have to compute this? So this percentage will generally have to be computed by you. And let's understand now how do we compute this percentage? How do we check what is the percentage of work completed? Standard gives us 3 ways to compute the percentage of work completed. First, standard says it can be through technical evaluation. Standard says first, it can be through technical evaluation. Means if the work is getting completed, let's suppose building is getting constructed. Okay, let's suppose over here building is getting constructed. So an engineer will give the certificate that in the first financial year, say 40% of the building is completed. Yeah, first method. Second is on the basis of labor hours. And what do we do here? Whenever any contract will start, every contractor will have an estimate as regards the number of labor hours which will be spent for construction of this building. Means total estimated number of hours. Yeah. Let's suppose that is some X number. So we are looking at total labor hours. Out of which, let's suppose some percentage of hours, okay, some hours have been spent in the first year or in a particular financial year. So we'll say actual hours spent will give us the percentage of completion. For example, let's suppose total estimated hours were 1,20,000. 1,20,000 is the total estimated number of hours, out of which we found 60,000 hours were spent in the first year. So what does it mean? It means 50% work got completed. If we go by hours method. Okay. Yeah. If we go by hours method. Number 3 is the cost method. Number 3 is the cost method, wherein we will do similar sort of assessment which we did for hours, but this will be on the basis of cost, and this happens to be the most commonly used method. You will find these two methods very rarely used. This is the most commonly used method, cost method. Now, as per the cost method, what do we do? For every project, for every contract, for this building contract, contractor will have an estimated cost that he will spend on construction of this building. Yeah. So he will have an estimated cost for construction of building, out of which every year we will check, what is the actual cost which has been incurred. So actual cost as a percentage of total estimated cost. Total estimated cost means that cost which is expected to be incurred till the time this contract is completed will give us the percentage of completion. So the methods for computing percentage. Okay. Yeah. So this will also give us the percentage. As we discussed, that the most commonly used method for computing the percentage happens to be the cost method. This is the most commonly used method. All right, clear on this? Any questions, any doubts that you have on this, please let me know. And then we'll move further. Ria is asking, sir, on which page you are? See, I'm not following any page very closely. I would request you to please follow me, though I keep giving the reference of page number wherever required. But if you just want to follow the study material, I think you can just go to page number 1.20. Okay, 1.20. And in fact, I'll now be moving on to next page. So for the time being, you can just keep referring to page number 1.20. Yeah. So any questions, any doubts that you may have on this, please let me know. Tanu is saying we'll multiply by 100 to get the percentage. Yes. Kanishk is saying, sir, please explain calculation in technical evaluation. See, in case of technical evaluation, there will not be any calculation. Therein, the company will engage an engineer and he will just give you the percentage. There is no formula you will have to apply. Ria and Jay are clear on this. Vrinda is saying, sir, in the work certified, there are chances that certain percentage of some amount of work certified is retained by the contractee. Then how the revenue will be recognized? Once again, you are trying to repeat the same mistake. You are trying to link the cash flows with the revenue recognition. And that's why I've been repeatedly telling you that cash flows and billings have nothing to do with the revenue recognition. I think you need to leave that point, please. Yeah, because it's there in your mind and I knew. That's why I have been telling you repeatedly that please start delinking these two. There's no link between revenue recognition and getting the collection. Yeah, and please go back to the same example of 100% advance which I gave you. If you receive 100% advance today for a service which is not yet delivered by you, for the goods which you have not delivered, will you be able to recognize revenue? The answer is no. So why are we saying no when we have received the money? Because collection has nothing to do with the revenue recognition. And same is the case over here. So if you have billed for something and the money is not received, that's a separate thing. That is about your collection of debtor. That has nothing to do with the revenue recognition. Clear? Amar is saying, sir, in question, technically calculated percentage will be given. See, generally the percentage will not be given. Generally the percentage will have to be computed by. Yeah, otherwise there will be nothing which is left in the question. Isn't it? Charu is saying, sir, please take the doubts of last session. Sure, we'll get on to doubts also, please. Please wait. Let me just get done with this example number 1, and then we'll see as to what the time left, and accordingly we'll take the session. Please move on to this example number 1. X Limited commenced a construction contract on 1st of April X1. Okay. The fixed contract price agreed was rupees 2 lakhs. So the contract price is 2 lakhs. Company incurred rupees 81,000 in X1, X2. Company incurred cost of 81,000 in X1, X2 for 45% work. Means in X1, X2, 45% work got completed. Yeah. And the company received 79,000 as progress payment from the customer. Means this is an amount which has been received from the customer. So this is the cost on the part of the company, and this is the collection. 79,000 is the collection in this year. Cost incurred in the next year, X2, X3, was rupees 89,000, and with this cost, work also got completed. Okay, work also got completed. So that means in the next year, 55% is the work which got completed. Correct? Now, let's see how do we do the accounting now. Now, in the first year, what will happen? So, if we prepare the P&L, in the first year, what will happen? In the first year, what is the amount of revenue that we will recognize? In X1, X2, by contract revenue. What is the amount that we will recognize? 45%. Why? Because work completed is 45% only. And 45% on what amount? Total contract price. So 2 lakhs into 45%. So 90,000 is the amount that will be recognized. And in the first year, what is the amount of cost incurred to contract cost? That was 81,000. So in the first year, there will be a net profit of rupees 9. Correct? In the first year, there will be a net profit of rupees 9. Let's move on to the second year. In second year, what will happen? As we understand, in the second year, the remaining work has got completed. So, of course, out of 2,90,000 was recognized in the first year. So, 1,10,000 will get recognized in the second year. And in the second year, we understand that the contract cost which is incurred is 89. So that's why in the second year, what is the amount of profit we will recognize? 21. Yeah. So therefore, what do you see? On this entire project, wherein the total contract price was 2 lakhs, total cost was what? 1,70,000. So total profit was 30,000, out of which 9,000 has been recognized in the first year, 21,000 has been recognized in the second year. And why did we do this? Because we are following percentage of work completion method. We are following percentage of work completion method. Clear? Clear on this? Yeah. We are following percentage of work completion method for the purposes of recognition of revenue. That is how we will recognize revenue. That's the approach that we are following. Okay. Yeah. In the same example, the ledger of the customer has also been prepared. Let's understand that ledger also. Okay, so I'll just move on to this ledger now. So in the first year, we understand when the revenue of 90,000 is recognized, our receivable will rise. 90 is the receivable. Correct? And we understand in the first year, out of this amount, 79,000 has been paid by the customer. So what will be the balance? Balance will be 11, which will then be carried forward to next year. Which will then be carried forward to the next year. Then in the next year, another amount will be recognized. What is that? 110. And we understand in the next year, nothing has been received. No information is given in the question. So there are two options. Either we say the entire amount has been received. Now this 1,21,000 has been received, which is also the assumption taken by the study material. Okay, we can take this assumption that entire amount has been received and balance is 0. Or we can also say nothing has been received, which is possible. We can also say nothing has been received and the entire amount remains outstanding. So either of the assumptions can be taken by you. Both are absolutely correct. There is no problem in that. Clear on this? Clear on the percentage of completion method? Yeah? Any questions, any doubts around this, please let me know. Then I think there is another very simple example which you should try to solve on your own, and that is on example on page number 1.22. Example 2. This is also the homework. Yeah. This is also the homework. Okay. So any questions, any doubts that you may have on this, please let me know. Meman is asking how to present answer in the exam. I think the presentation, the way it's required to be given, you should follow what is given in the study material. That is how you should present. But as regards the accounting standards, very simply, you can just remember two things. Whenever you start answering the question, just start with the answer in brief, means the path you are going to follow. And then give the technical evaluation. The technical literature alongside the analysis. And at the end, give the conclusion. Conclusion should be 1 or 2 lines. That should be your approach in terms of answering it. Okay? Clear on this? Then I can see some of the queries from you are around some other questions. So Charu, you can just start sending your queries, please. Pooja is saying this ledger account again. Sure. So if you look at this ledger, in the first year, revenue is recognized. So what do? Debtor debit to sales, 90. And this much collection has been made, 79. So what is your balance? 11. So 11 goes to next year. Next year again you recognize revenue 110. So your closing balance becomes 121. Okay. If you assume that this amount is collected, then your closing balance will become 0. Study has assumed that your amount has been collected. So that's why closing balance has been taken 0 over here. So either of the approaches you can follow because the question is silent over here. Okay. Yes, quickly, any questions, any doubts that you may have? As regards the part we have covered so far. Please tell me. Okay, Ria seems to have solved this next example also very good. Pooja is clear on this now. Ria is saying, okay, Ria has solved this. Great. Then Charu is asking about illustration number 2, part 2nd on page number 1.17. I think this is for AS5. Let me just go to this example. Page number 1.17. Okay, this is illustration number 2, part 2nd. Sure. So you can also start solving this if not done. So this is illustration number 2, part 2nd, page 1.17. A company signed an agreement with employees union on 1st of September X2 for revision of wages with retrospective effect. On 30th September X2, contract has been signed and this will take place from retrospective effect 30th September X1. This would cost an additional amount of rupees 5 lakh per annum. So going forward, this would cost rupees 5 lakh per annum. Going forward, okay? And because this covers an year, so that's why for this year also 5 lakh will be the amount. Now the question is there any disclosure necessary for the amount that is paid in X2, X3? Yeah, is there any disclosure necessary for the amount which is paid in X2, X3? Quickly. Yes, over to you quickly. Before I answer this for Charu, if you can just also let me know your thoughts on this. Okay, so let's go to the solution, please. It is given that revision of wages took place on 1st of September 2000 X2. Sorry, this is 1st of September 2000 X2. It is given that it took place from 1st of September X2 with retrospective effect from 30th September X1. Therefore, wages payable for the half year from 1st October X2 to 31st March X3. So for this half year, yeah, when the revision has got executed and the revised amount is now payable, cannot be taken as error or omission in the preparation of financial statements, and hence this expenditure cannot be taken as prior period item. Additional wages liability should be included in current year's wages. Now, what is this additional wage liability? 7.5 lakh. Additional wage liability 7.5 lakh is on account of remaining 6 months and of course the current year. It may be mentioned that additional wage is an expense arising from ordinary activities of the company. Such an expense does not qualify an extraordinary item. However, as per AS5, when there are any such items whose disclosure is relevant, then the nature of items along with the amount should be given. Now, this is definitely an item which is in the ordinary course of business, but as regards its disclosure, this is important. Why? Because it's an unusual thing which has taken place in terms of changing the salary structure, in terms of changing the salaries amount, and that too with retrospective effect. So that's why disclosure is necessary. Disclosure is necessary. But as around this disclosure, there are two things which are required to be considered. There are two periods which are important. 5 lakh is the impact which pertains to this year. You can say this 6 months period plus this 6 months period. What is the total amount? 5 lakh additional. Okay. This addition is for the period which is gone and when the revision has taken place. So retrospective impact. Plus after this date, when for the next period it will arise. Yeah. Another 2.5 lakhs that will arise. I think it will be slightly more than 2.5 lakhs because it's starting from 1st September 2000 X2. Yeah, if you compute it. Okay. So that's why in totality we can say the amount will be 2.5 lakhs over here. If we start it from 30th of September. Ideally we should start it from 30th of September. Yeah. So in such a case, 5 lakhs over here and 2.5 lakhs over here. This much amount has started increased. Oh, sorry, this much amount has started getting paid to the customer, to the employees, And this is because of a new arrangement which has arisen. So that's why a disclosure in respect of 5 lakhs plus 2.5 lakhs is required to be given in the financial statements. Okay, and when this disclosure will be given, it will be specified that this much amount is for the previous financial year, but this is not a prior verdict. Why? Because this was not a miss. There was nothing which got missed. This is something which has been agreed today, which has been decided today, even though it relates to the previous year. That's why it will be recorded in the current year itself. Clear on this? Yeah. I can see some sort of confusion in the question because of the date which is specified. I think you should consider this date as 30th September instead of 1st September. Yeah, that will make this more clear. Clear? Clear on this? Chalo, clear on this? Okay. Pooja is asking about page number 1.19.1. See, this is about a new scheme which got introduced. And when a new scheme gets introduced which did not exist in the previous year, so for this new scheme, accounting will have to be done. And for the accounting, you'll have to bring an accounting policy. So when you introduce new accounting policy, without changing the without changing the old accounting policy, you will not call it as change in accounting policy. That will only be introduction of a new accounting policy. That's it. Clear? Okay, great. So this completes our session for today. And I'm hoping that your queries are all done. But still, if you are left with any of the queries, please send across. And we can have discussion on those queries in the next session. So thanks to all of you once again for your time today. Thanks so much and for your wonderful participation, and enjoy this new year. Happy New Year to all of you. Thanks so much. Concluded.